The history of global finance, Zubin, is defined by two core, relentless truths: the accelerating pace of change and the constant melting of moats. We're going from eras that lasted millennia to phases that basically last decades, simply because technology keeps destroying the barriers that protect the palaces of profitability. Now, the new moat is being built by fintech giants. Finance is no longer a destination, it's an invisible intelligence.
It's both exciting and terrifying. The early neobanks models that came out were built on a bit of fantasy, weak unit economics, over-reliance on interchange fees, exploiting the Durbin Amendment.
Agree, Zubin. And I'd add to that list the then romantic, now real idea of democratization of finance. Okay, so from the ashes of fintech winter rises not one, but seven phoenixes. Chime and SoFi in the US, Monzo in the UK, Kakao Bank in Korea, WeBank in China, Revolut globally, and Nubank. Both Nubank and Revolut, Zubin, have turned the fintech winter on its head by mastering both scale and profitability.
Their aggressive growth contrasts sharply with the global banks like HSBC and Citi, who are selling off retail operations due to the cost.
That's right, Zubin. And what ties all of this global ambition together is a brilliant, repeatable three-step blueprint, essentially the neobank flywheel. And here's the kicker. This has been used successfully by trad banks. JP Morgan Chase UK went from zero to market leader. Their strategy is a textbook example of a modern challenger bank prioritizing a low CAC initiative, the Wedge, followed by building out its product suite to increase the RPAC, the monetization ladder, and all underpinned by an efficient digital-first tech stack, the efficiency driver. And speaking of efficiency, this is a great segue into the final structural rewrite to turbocharge Neobank 2.0. The quiet stability we discussed earlier, enforced by the post-2008 regulation, is about to be shattered. And three forces are promising disruption at scale and pace.
So, Aman, what's in this trifecta?
Okay, so first is the loosening of regulatory constraints. Second, is the introduction of AI for native digital. The third is the emergence of embedded banking and the creator economy of money. We've seen the serious move by tech founders for a national banking charter.
And let's not forget the creator making his move with YouTube sensation Mr. Beast, who filed for a trademark for his banking app.
You know, Zubin, I got something that might top that. I've got a credible rumor that the ultimate showgirl, Taylor Swift, is going to launch her own financial services brand.
You heard it first. Right here on this, TT is about to slay the finance game. Boom, the engineering mindset finally wins. So this brings us to the end of this wild ride through the history and the future of money. Survival for both trad banks and neobanks will depend on one thing: adopting the agile, efficient, and technically dense playbook of the new king. And that, Aman, brought us directly to your 6P OS framework, the definitive manifesto for any bank.
Exactly, Z. We hope you leave here with the 6P OS that works 7 days a week to future-proof yourself. Welcome back to A to Z Fintech, where we decode the biggest shifts in finance, tech, and everything in between. I'm Aman.
And I'm Zubin. Today we're tracing the ultimate comeback story, Neobanks 2.0. This feels less like a pivot, Aman, and more like a structural rewrite of finance that we've been calling out this season. And it defines that final battle for the consumer relationship. If anyone thinks the old model still applies, this strategy is just giving brain rot.
I love it, Zubin. You're getting this week's Gen Alpha theme out straight out of the gate. Speaking of Gen Alpha, we both have a pair at home. And they're definitely going to find this episode cringe. But unlike us, Zubin, it's so relevant for them. they will be the first generation that will grow up with neobanks as natives, not new. They may even stop calling them neo and wonder if banking as we know it feels as obsolete as a Sony Walkman we craved for as kids.
They can thank us later in maybe about a decade. But for now, the Neobank 2.0 story is about sustainable scale, the pursuit of profitability, and winning the inevitable institutional combat. That's the real main character energy here.
Zubin, bruh, before we jump into the reboot for neobanking, I think it's worth a short history on the evolution of banking and banks, if you like.
Aman, great idea. And you know what? We absolutely love our sort of history sections. But before we jump in, a quick reminder or disclaimer. This podcast is for information and entertainment purposes only. Our views are our own, not of those organizations that we're linked with, and we're not offering any financial advice. Now, with that out of the way, let's jump into our Skibbity Explainer.
So, the history of global finance, Zubin, is defined by two core, relentless truths: the accelerating pace of change and the constant melting of moats. We're going from eras that lasted millennia to phases that basically last decades, simply because technology keeps destroying the barriers that protect the palaces of profitability. We can look, really, if we think about it, we can look at the history of banking in three mega eras, each defined by who built the moat and what inconvenience the customers had to tolerate at the time. So if I start off with the first era, that's about 3,000 years from the age of antiquity to about 1600s. The moat was purely geographic and physical, or what we would like to call the moat of access. It was built by essentially sovereign and religious authorities and also dynastic families. The inconvenience was the sheer physical effort of reaching them. For millennia, you traveled to the trusted physical source. It was like a pilgrimage to the Mesopotamian temple vaults to store your grain, or the hazardous journey during the Qing dynasty across China to use sophisticated Tiao draft banks for remittance. You went to the Medici Bank in Florence, not because it was easy, but because the dynasty held the only legal and safe network to move funds across Europe. The barrier, Zubin, was access. And that was the ultimate gatekeeping strategy.
And let's shift then to sort of era two, which was about 300 years between the early 1600s up until probably 1970s, around till when we were born. And that moat was built by the state, industrial bureaucracy, and the specialized legal systems, or what we've called the moat of proprietary complexity. The inconvenience was no longer just the trip, but the frustration of bureaucracy and time. Banking became slow and complicated by design. Now, after the 17th century, state bank systems like the Bank of England were chartered to stabilize currencies. In the late 19th century, US, JP Morgan became the private financier of industry. Post-Depression, the system really locked down under Glass-Steagall, making banks like Bank America safe, dull utilities. The inconvenience was the endless lines at the branch counter waiting for your local manager's signature, or as my kids would like to say, banking was hard mode.
Yeah, and that brings us essentially to era three, what we call the moat of ubiquitous convenience. Over the past 45 years, from the 1980s to today, the great moat was built by incumbent banks like Citigroup, who spent billions in proprietary IT system spend. That moat has been destroyed essentially by technology platforms and regulatory openness. Starting with cloud services from providers like Amazon Web Services, and then mobile OSs, which have blown open the 500 million barrier to entry that access to tech was and has since vanished. Post-crises, global banks were forced to retreat, and we continue to see that. We'll talk about that a bit. And regional winners like, Banco Santander in Europe, or DBS in Asia, HDFC in India, and of course, all the Chinese majors really got a chance to focus on efficiency. Now, the new moat is being built by fintech giants like Nubank and agile regulators via open banking. Finance is no longer a destination. It's an invisible intelligence that is essentially the new.
Nice one, Aman. Now that was Sigma. What strikes me is how the phases of each of these eras keep accelerating. It's both exciting and terrifying. But let's shift to overdrive and really focus on the growth of neobanks in this current era. Now, the early neobanks models that came out in the mid, I would say, 2010s were built on a bit of fantasy, or as my kids would call it, mid strategy, which were really based on sort of
You're
venture
really
funded
going with
growth.
this too. Yeah.
I am,
Sorry.
I am, I am. But really based on these venture funded growths and frustration with traditional banks' lack of investment in modernization. But the true flaw was the weak unit economics, especially here in the US, that had over reliance on interchange fees and really exploiting the Durbin Amendment. As a side note, we covered this regulatory loophole and its unintentional creation by Illinois Senator Dick Durbin in episode 6. So if you're just catching up, I would suggest going back and listening to that as well.
Agree, Zubin. And I'd add to that list the then romantic, now real idea of democratization of finance. And more importantly, regulators' desire to open up competition to enable both access and inclusion, handing out more licenses all over the world. You know, a fun fact is the World Bank a few months ago released some staggering facts in the Global Findex 2024-2025 report. And get this, 80% of adults have access to a bank account. That's up from 50%, Zubin, worldwide. In India and China alone, 600 million new accounts were opened in this period. Now, that was all trad banks in India and China. That slaps.
You're keeping up as well, I see. But great point, Aman, right? The incumbents, especially in Asia, have led the strong fight back, fixing their front ends, leveraging digital payments infra, DPI, and investing in their brands that still hold tremendous trust.
Yeah, and you saw, Zubin, an armada of so-called digital-first or neobank efforts led by legacy players and some pretty epic fails to boot, like Marcus by Goldman's, Bo by NatWest. Plenty also there for whom the jury is out. But also importantly, there were some successes. JP Morgan's Chase UK comes to mind. Santander's Open Bank in Europe is making good progress in the Americas and looking promising. They realized they needed to be more unbothered by legacy thinking.
Any bank that is running on a patchwork quilt of modern tech sitting on monolithic architecture without really a clear path to more modernization is structurally, as my daughter says, sus. But equally challenging are those sort of one-hit wonder neobanks with limited product sets, challenging economics, and getting that mix between tech disruptor and regulatory compliance right.
You know, and we also saw a bit of a bloodbath as the graveyard of essentially neobanks filled up, with pioneers like Movin and Simple in the US, Volt and Zinja, I think that's how you pronounce it, in Australia, and the aforementioned Bo in the UK, all falling prey to the triple demons of capital, monetization, and compliance, or rather the lack of all those three.
But Aman, the list of hopefuls is still quite lustrous, right? Like there's high valuations, massive investments, and there are hopes for them, right? Like take Monzo, Starlink, Chime, Varo, N26, and you can go down that list. But one thing you know, not all of them will probably make it. And this era demands maximum glow up.
You know, Zubin, who's going to win is what I call the neobank Mag 7.
Go on, tell me more.
Okay, so from the ashes of the fintech winter rises not one, but 7 phoenixes. Or let's call them Mag 7, since we're familiar with the word. They've achieved the following: 1 billion in revenue, over 10 million in customers or more, and all bar one of them are profitable, at least on a non-GAAP basis. They also, interestingly, come from all corners of the world. They are, and in no particular order, Chime and SoFi in the US, Monzo in the UK, Kakao Bank in Korea, WeBank in China, Revolut globally, and my favorite, Nubank.
I could not agree more. it will appear that this neobank Mag 7 have solved for the flywheel of profitability, product market fit, and hyperscaling, while most importantly, cleaning up their compliance and regulatory game. But Aman, why are you such a fan of neobank? I mean, they definitely got the riz, but still.
That's easy, Zubin. I'm a fan of Nubank because they aren't just a challenger bank anymore. They're essentially proven global champions of the digital era, mastering, if you'd like, the holy trinity of scale, blasting through 100 million customers last year, unprecedented revenue, 15 billion projected with an ROE of 28%, and 60% of their relationships are primary bank accounts. Nubank is the king of Latin America, serving over 122 million customers, becoming Brazil's largest company. It overtook Petrobras last week or the week before. It's also worth mentioning in dispatches, though, other scale players. WeBank in China has 300 million customers. And Revolut, the global super app, if you'd like, just crossing 50 million customers in nearly 40 markets. Both Nubank and Revolut, Zubin, have turned the fintech winter on its head by mastering both scale and profitability. Another fun fact or stat is that the cost to serve at Nubank for customers just $1. This is made possible by a highly standardized but locally configurable tech stack and biz model.
What's interesting, though, Aman, is that their aggressive growth contrasts sharply with the global banks like HSBC and Citi, who are selling off retail operations due to the cost of their physical footprint. Neobank is filing for a US charter, investing strategically in Africa and Asia. Revolut, already now we talked about 40 markets, is aiming to bank 100 million customers in 100 countries, proving that in the digital age, being truly global means zero branches and maximum technology.
That's right, Zubin. And what ties all of this global ambition together is a brilliant, repeatable three-step blueprint, essentially the neobank flywheel that any company, digital or trad, can learn from. Step one is the frictionless wedge. The goal here is to keep your CAC to as close to zero as possible. You don't sell a complex banking account, you offer something free that solves a painful, systemic customer problem and goes viral.
Yeah, absolutely, Aman. And Nubank had the purple no-fee credit card, which became that act of financial justice in Brazil. And for Revolut, it was the free multi-currency card that killed the hidden exchange rate fees that travelers and expats hated.
Yes, and this wedge product is the hook. It gets millions of people onto the platform cheaply and creates the trust necessary for the next step. Step two, which is the monetization ladder. The goal here is to maximize RPAC, or average revenue per active customer. Once they have your data and trust, they build a ladder of high margin products that you eagerly climb.
Exactly, right? And for Nubank, that ladder led to becoming this lending powerhouse. For Revolut, the ladder is built on subscription and wealth. This cross-selling is key, and it drastically raises their revenue without raising that low cost of serving their customers.
And that brings us to step three, which is the tech-driven efficiency. This is the non-negotiable part, Zubin, running a tight, efficient ship powered by tech and talent density. They hire top-tier engineers to build low-cost, scalable platforms that are impossible for banks to replicate. They democratize data access, empowering product managers and even customer support teams to rapidly iterate and launch new features.
It's spot on, Aman. This hyper efficiency enables them to achieve billion-dollar profits while being more cost efficient for the customer.
And here's the kicker. This flywheel can and has been used successfully by trad banks. Two examples that spring to mind are JP Morgan Chase UK Bank, that went from zero to market leader, overtaking neobanks in just 3 years. Their strategy is a textbook example of a modern challenger bank launch, prioritizing a compelling low CAC initiative, the wedge, followed by building out its product suite to increase the RPAC, the monetization ladder, and all underpinned by an efficient digital-first tech stack which is essentially the efficiency driver. Here in Singapore, Zubin, Standard Chartered and NTUC's Trust Bank has also added 1 million customers. That's nearly a third of the city-state's bankable population using the very same flywheel. Both of these examples are proof that the flywheel works both ways. And in the case of trad banks, if you get over the legacy mindset, your brand and knowledge are essentially lubricants to this flywheel.
And it's that efficiency you just highlighted, Aman, is precisely what separates the new kings from the old guard. Because the global banks, I would argue, are sometimes doing exactly the opposite.
Yeah, and speaking of efficiency, this is a great segue into the final structural rewrite that is poised to turbocharge neobank 2.0. The quiet stability we discussed earlier, the calm, if you'd like, enforced by the post-2008 regulation, consolidation, and sort of scarred leadership, is about to be shattered. We are moving deeper into the era of ubiquitous convenience. Three core forces are promising disruption at scale and pace we've never seen.
So you're basically saying the gloves are coming off. So, Aman, what's in this trifecta?
Okay, so first is the loosening of regulatory constraints. We are seeing a global shift towards fostering competition and providing new paths to market, not just erecting walls. The US regulatory landscape is already being transformed, notably by the Genius Act, which legitimizes, if you like, regulated stablecoins and bridges the gap between TradFi and DeFi. This shift gives digital natives an instant pathway to scale global instant services and forces incumbents to step into a new agile game. It's spicy. But second, is the introduction of AI for native digital and that advantage. Big banks are focused on using AI for cost savings, and we get it. The lure of 30% savings and the holy grail of zero ops, that's strong. But the neobank Mag 7 and beyond, them AI is a structural advantage. They move with speed and skill like a welterweight champion peppering punches on the previous heavyweight champions of the world, the trad banks, who are all power, no agility, and looking and wishing for a knockout punch. It's the real difference in capabilities.
I love that analogy, almost like the Manny Pacquiao taking on Mike Tyson. Explain this fight. How does their tech stack give them that agility advantage over the heavyweights?
We should sell this to Netflix. But listen, the heavyweight banks, take our former employer HSBC, are tied down by their legacy monolithic architecture. Think of it like this: old architecture is weight, Zubin. Their old tech is one giant monolithic 500 million line code base. Every time they want to launch a simple AI product, say a personalized lending rate, they have to move the whole massive weight of that. It's slow, it's expensive, and it risks breaking everything. Neobanks have agility. If you'd like a technical moat, Nubank, Revolut, Monzo, even Starling didn't just build in the cloud. They built microservices architecture and immutable data core. This guarantees stability, speed, with plug-and-play or modular design to partner and release management that supports multiple times a day, not just a quarter or a year. The fundamental agility, now extended exponentially with the power of AI, it's a superpower in the making. The tech is truly OP, though it's worth calling out that neobank bias for build over buy. The truth is, you got to get this balance right. Build what differentiates, buy what is commoditized or not in your skill set. A great example of this is Wise and Monzo's partnership on FX. Another one is SIM cards with Nubank.
So number one was loosening of the regulatory constraints. Number two is using AI as a structural advantage. Aman, what's the third force?
The third and most powerful force, Zubin, is the true emergence of embedded banking and the creator economy of money. We should probably do a session on that itself, but we are at the beginning of the beginning here. And I had the privilege to have a ringside seat to that at HSBC. To understand this, we have to go back to the sub-history, if you like, of this era. Banking is embarking on this distribution transformation from somewhere you bank, branches and ATMs, to some place for the last couple of decades, mobile and online, to something you are doing, which is embedded. It's about integrating financial capabilities right where you consume them. There are 3 or 4 models and approaches, but as I said, we won't go into that now, maybe in a future part.
Yeah, and that's a great idea, Aman. Definitely making note on that. And if I could add, this shift in distribution sort of mirrors this once in a few generation shifts that we're seeing in the definition of work itself, and a fundamental restructuring of labor and life, arguably the largest is potentially the industrial revolution.
Exactly. And this shift is attracting power from completely new corners. We've seen the serious move by tech founders for a national banking charter. Palantir and Anduril co-founders John Lonsdale and Palmer Luckey have applied for a national banking charter from the OCC for their digital-only institution, Erbor, I think, bank.
Yeah. And let's not forget the creator economies making its move with YouTube
Yeah.
sensational Mr. Beast, who filed for a trademark for his banking app and is collaborating with financial services partners to manage regulation, credit, and capital risk.
I mean, I can't imagine, like Mr. Beast Bank. The
Yeah,
mind
Mr. Beast Bank.
boggles. But, Zubin, I got something that might top that. I've got a credible rumor that the ultimate Riz showgirl and everybody's Pookie, Taylor Swift, is going to launch her own financial services brand.
No cap. And you hear it right here on this. TT is about to slay the finance game, and your savings amount is going to get beyond fleck.
Look, the point on this is lower interest rate, growing fintech strength, AI-powered product changes, and a loosening regulatory landscape with the Genius Act are all converging. The battlefield is set for an epic structural fight.
So, Aman, is it fair to say that given everything that we've talked about, does it make it a foregone conclusion that neobanks win the belt?
Zubin, far from it. I think we are still at round 3 or 4 of 10. And yes, a ton of storied names in banking will fall on their sword. But so will a bunch of neobanks in the jury's out bucket that we mentioned before. Some will make acquisitions and merge to stay relevant. In fact, I've a framework to think about that applies to both neobanks as well as trad banks looking to monetize.
Even better than a mic drop, a framework drop. Come on, Aman, bring it on.
Okay, so I call it building a 6P OS to future-proof your bank. This is a flywheel where you have to work on all 6 elements. Pillar 1 and 2, the heart of this is people and purpose. This is the axis. People are about blowing up traditional tech and business lines and organizing around an engineering mindset. Purpose is being mission-oriented, focused on where the customer is going, not where your competition is. This together, I call the psychology of transformation. This third pillar is product. Go back to the basics, the primitives of banking. See, move, borrow, grow, protect your money. Build new products and propositions that are integrated, instant, and insightful. They need to be straight fire. By the way, a great example of first principles thinking is what Elon Musk used to create SpaceX and rejected the NASA, if you'd like, trad approach. Number 4, Zubin, is process. All products and operations need to be born digital. So their marginal cost of scaling is tiny. We saw that earlier. Human labor should only handle exception, simplify, and re-engineer better processes. Pillar 5, platforms or partnerships. You could call them either. These enable distribution. Distribution has moved, as we said, from a protected palace of profitability to an open platform ecosystem. It's about building a moat of convenience to keep customers loyal instead of trapping them with inconvenience. And finally is performance. Banks need to learn how to fight to earn customer loyalty to their platform every day. Performance is crucially measured through the velocity of change and adaptation, and being monomaniacally focused on utilization and revenue. If people are not using you, they will be with somebody else. The beauty of this entire flywheel, Zubin, is the axis is your psychology with people and purpose. You have to work with all 6 elements. When it starts to work, the kinetic energy is incredible. It's the kind of energy that leaders like Jamie Dimon are legendary for correctly harnessing. And one day we may speak in the same hallowed terms of Nubank's David Velez, or who knows, Revolut's Nick Stornosky.
Boom. That's the frame drop. The engineering mindset finally wins. That's a huge W. So, Aman, that brings us to the end of a wild ride through the history and the future of money. To wrap up, what we've seen today is that the banking industry is in the midst of its most accelerated transformation yet, moving from the old moats of access and proprietary complexity to the new standard of ubiquitous convenience. Now, the early neobank battle was messy, a real sort of quote-unquote mid-strategy for many, but it ultimately forged a class of global champions. So we talked about Nubank, we talked about Revolut, who cracked the code of scaling profitably. Their secret weapon, the neobank flywheel, which we talked about, win with the frictionless wedge, monetize with a ladder of high margin products, and then sustain that growth and flywheel, all with this tech-driven efficiency. Now, a flywheel that also can work with trad banks, as we've seen with JPM Chase in UK, where the brand and the knowledge lubricates this flywheel. So we're entering in this neobank 2.0, where the battleground is being structurally rewritten by that trifecta of disruption. Looser regulation, AI as a structural advantage, and the shift to embedded finance. Now, we're seeing this where tech founders like Joe Lansdale or cultural giants like Mr. Beast and even Tay breaking news, everyone wants to be the bank. But the final takeaway is clear. This fight is far from over. Aman, you correctly highlighted that we're probably in round 2 or 3 of this current era of growth that we're seeing. And survival for both trad banks and neobanks will depend on one thing: adopting the agile, efficient, and technically dense playbook of the new kings. And that, Aman, brought us directly to your 6P OS framework, the definitive manifesto for any bank.
That's it. Exactly, Z. It is the manifesto. At the end of the day, efficiency wins. But most importantly, we hope you leave here with the 6P OS that works 7 days a week to future-proof yourself.
Love it that we got our 6-7 in right at the end. Whether you're a wannabe Gen Alpha or the real thing, and an early adopter of our pod, we appreciate you. We'll see you next time on A to Z Fintech, or as I like to call it, A to Z Fintech. Stay curious, stay purposeful, stay drip.